Hello and welcome to this next installment here from the live trade room. My name is Tim and I'm one of the traders here and happy to take you through the US Open where we're looking to trade it live and fully interactive for you in the session. So just before we begin, those of you that are interested in genuinely learning how to trade the financial markets with a high degree of knowledge and understanding and an ability basically to make consistent and disciplined trading decisions, then we can absolutely help you facilitate those objectives. So for more information, just go to our website, www.thelivetraderoom.com, and we can you can speak to us there through the chat function if you have more details. We've got a large range of products and services, all geared up to facilitate your needs in terms of the amount of time you have available to trade these financial markets. We've got a couple of different options available, all at very, very low cost as well. So we keep that price point as low as we possibly can. So go over to our website there for more information. So what will we do during the next hour or so? We will be looking for high probability trades across some of the world's largest markets, from your foreign exchange markets to your commodities, and also global indices. It's very important when we trade markets that we understand the correlations, we understand what is actually impacting and driving these markets. In In addition, we'll be looking at some of the news events that are likely to impact the markets as well. We want to make sure that we don't trade markets blindly. We want to know and understand where the major news events are and how we're likely to gear ourselves up prior to those news events, and probably even more importantly, post those new events. Okay, so let's start then. Let's get straight into it. We'll start with our risk warning and let's see if we can make some cash this afternoon. Please take a brief moment to familiarize yourself with our risk warning currently up on screen. It's incumbent upon us to make sure that you are fully aware of the risks involved in trading these financial markets. Okay, so oops, let me take that back. Okay, so the first thing we really do when we hit our trading desks is just make sure that we are mindful of some of the news, the data points, and as they unfold. The last thing you want to do is to be sort of looking for trading opportunities during, the US trading session. Be completely ignorant to the fact that there's a major news event out. You get into those trades and all of a sudden you get blown out of those markets because of some turbulent volatility in the markets. So you can avoid all of that by just making sure that you do your due diligence. You just make sure you understand what news events are in the pipeline and try to navigate around them. Good afternoon, Jonathan. Hope you're keeping well. I am indeed. Hope you all had a good weekend. So good to have you with us. So really, as you can see currently up on screen, what we have is a very, very quiet trading day, to be fair, from a news perspective. The macro events are kind of dominating proceedings, but there is a very important news event to be mindful of midweek. Tomorrow we've got retail sales numbers impacting the US dollar, and they are monthly figures, so we'll see what sort of progress has been made month to month. But the major news event of the week really is the FOMC. This is the big one. Yeah, good stuff, Jonathan. Great to have you with us. So yeah, the FOMC is the big one for these markets. All central banks look towards the FOMC and the Fed regarding monetary policy decisions. There's a very significant shift. The Fed have kind of passed the baton as far as supporting markets on the fiscal side to Treasury, to the Treasury Secretary, who's Janet Yellen, who was formerly the Fed chair. So there's a lot of it's a strange world we live in at the moment. But what that means is, and I suppose what we'll delve into a little bit more about this in the coming live webinars, and certainly in our live trade plan webinars and our trading webinars in the evening. We'll discuss this in a lot more detail, but we'll be looking to see what the Fed's approach is towards future rate hikes. We've got this dynamic at the moment, whether you're familiar with it or not. It's the backdrop behind these markets, and it's very much inflation related. So there is this there's an uptick in bond yields. The 10-year, if you look at the 10-year or the 30-year US, you'll see we're at post-COVID, we're at annual highs as far as bond yield is concerned. And I suppose the major reason why that's quite significant is that it can imply that we're likely to see this inflationary environment, and that will work hand in hand with the stimulus package, the 1.9 trillion, all of the monetary policy measures that have been put in place, low interest rates, lots of quantitative easing, lots of bond buying. So the people who are buying the vast majority of these bonds are, of course, your central banks. It's kind of been a policy of theirs, the ECB, the BOJ in Japan. They've been doing it for 20 years now, nearly, and the Fed. So, and they're trying to support, I suppose their ultimate aim really is to try and manage inflation and create price stability. Now we look to the equity markets for the uptick.
Bottom of the hour, we will see the release of the US New York Fed Empire Manufacturing reading for March. 14.5 expected versus prior reading of 12.1. Reuters seeing a range of 10 to 20.0. Looking to the breakdown on last month's reading, the new orders index at 10.8, while prices paid at 57.8, and employment index at 12.1. 6-month business conditions index as well came in at 34.9. Additionally, at the bottom of the hour, the Canadian manufacturing sales for January, month-to-month 2.5% expected versus prior reading of 0.9, with Reuters seeing a range of 0.5 to 4%, and the Canadian existing home sales are due out at the top of the hour.
Okay, so I do have this this squawk that we use playing in the background as well, so I will pause occasionally depending on the news event. Now, of course, we don't have significant news events to deal with. They were referring to the manufacturing sales, Canadian dollar, and the US dollar, the Empire State Manufacturing Index as well. So you can see really from, if you look at FOREX Factory, we look at the impact news events, and we're interested in the high impact news events rather than the yellow. And we can see we've got these news events at 12:30. I suppose good afternoon, Finbar. Hope you're keeping well and you had a good weekend. Just a quick note just regarding daylight saving time shift. So you'll notice there's sort of strange times really with some of these data points, and it's basically because there used to be there is over the course of the year there's a 5-hour difference between London and New York, and for this period where the clocks go forward in the US and Canada, there's currently only a 4-hour time difference between London and New York. So all of the news events are literally like an hour earlier, basically. So we're seeing sort of strange times like core retail sales numbers, which would normally be due out at 1:30. For the time being, until Europe goes into daylight saving, we'll be working within this 4-hour slot. Let me see when that is, because I'm not too sure. I think it's about 2 weeks' time normally. So so what we have towards the end of March, we've got daylight saving across Europe. And then if we run it on Australasia, we'll have daylight saving early April in Australia and New Zealand. Okay, so going back to today's trading conditions then, and data points. So Monday the 15th of March, we don't really have too much to contend with to any great degree. So let's get up our trading platform. So yeah, we've got this delicate balance really with the US at the moment. So it's going to be interesting to see what price action we get in the build up to the Fed, the FOMC on Wednesday. And we'll see what impact, this week is opening up. Each week is kind of its own kind of micro market, basically, where we can see and assess what our strategy is going to be. So we'll have a look at the dollar in quite some detail and the equity markets, and that's really what's worth focusing on. The thing is about inflation is that will it create an environment in which the Fed will have to increase interest rates, and that's the key. That's really what the markets do focus on. So without further ado, let's start looking at these markets. And being Monday, it is important to just have a little bit of an overview of last week's trading conditions and look to sort of ease ourselves into the trading week, to be fair. I'll just move that slightly. Okay, so It's really worth looking at the indices markets, and it has been for quite some time, just to see how we can trade the correlations in these markets, because if equities push higher, we're in a risk-on market condition, which implies that we're likely to get dollar weakness and capital coming out of gold and the yen. And we're seeing some of those correlations play out. I wouldn't say necessarily all of them. So we do have this slightly, we have a market condition which is slightly at odds, really. So what we can expect is, if we can all agree, and we might be, and some of these indices markets are at slightly different phases, but the vast majority, we're probably in more of a risk-on type of market condition than a risk-off, and I'd probably take the Nasdaq perhaps out of that equation. That's looking a little bit more on the negative side. But we can look at these markets and we can suggest that, okay, it looks on the surface that we have these risk-on market conditions. So really then we would like to see, right, if capital is flooding into more riskier asset classes like the S&P, then, you know, do we see correlations across the yen? Are we seeing capital coming out of the yen? You can see against the euro, the pound, and the dollar. And the answer is clearly yes. You know, we're up at these momentum highs. So that's fine. That's in keeping with our expectations. We can have a look at gold. Is gold selling off? You'd probably look at this price action and suggest, over the longer term, medium and longer term, yes, it is selling off. We're currently experiencing a bit of a pullback, so it's not fitting in terms of price action over the last couple of days, but you can see that the overall bias to this market is to the downside. And I'm just going to get up my pen just so I can share some analysis with you. But for gold, it's really a case of, if we're in this sort of risk-on market condition, to be able to look for the next opportunity to actually take the next leg to the downside. So we're looking to go with this sort of more recent downward trajectory with this trade. So there's your channel, and we're generally in this sort of downward bearish momentum. So for us, it's a case of looking for selling opportunities. Now, we very nearly got into this on Friday. We had a few of the other correlations really not stacking up too great, and I suppose.
So 3 minutes now to the bottom of the hours. We had the US Empire Manufacturer reading for March, 14.5 expected, while the Canadian manufacturing sales for January, 2.5% month-on-month expected.
Okay, so I suppose we were justified in the end, because, and the thing is with us, if we get market conditions that we're not too comfortable with, we generally hold off. So it's not necessarily all about clicking the button as many times as you can. It's I suppose having conditions that you have a little bit more confidence in, and those are the types of trades that we prefer to cherry pick. So some of the other conditions and the correlations weren't great on Friday, but we had the gold market sell off and then subsequently reverse. So from a support and resistance perspective, you know, what we'd be looking for is the more recent lows and seeing if price conforms to that. So we've clearly got these lows just sitting up at these levels. This is the more recent one, and the highs, we got these series of lower highs. So when we experience a pullback like this, we're actually looking for prices to push up a little bit higher, i.e. up to the 1760 level. Then that would tick an awful lot of the boxes. You know, you could take this bit of price action here. Price makes a low. We move sideways for a period, and then we make that new low. Then we get this little pullback trade, get the extension, and prices got a habit of just pushing back to previous levels. And You know,
1 minute to go now. 1 minute.
we don't have to be too tight with these levels. We can give it a little bit of flexibility on each side, but they can really sort of give you a really defined edge in these markets. And as you can see, we're using our eyesight, we're using our understanding of support and resistance, and also our understanding of Japanese candlesticks. They give us certain information. So really, if this market is treading water around these lows, then unfortunately we have a little bit of a question mark, because we've got the monthly low. If we zoom out a little bit further, we do have monthly lows sitting in here. That's what this red line represents, but we're actually consolidating above that level. So again, we've got this little question mark.
10 seconds.
Now, if this market pushes up higher, up to these levels, and starts to give us some doji candlesticks at a higher level, then that's your sell trade.
17.4, 17.4 for the Empire Manufacturing to Canada. Manufacturing sales at 3.1%. Again, repeat out of the US, Empire Manufacturing at 17.4.
We'll just have a quick look at that.
Expected 14.5 expected. With the breakdown, the new orders index at 9.1, prices paid at 64.4, the employment index at 9.4, and 6-month business conditions index at 36.4. Into Canada, the manufacturing sales at 3.1%.
Okay, so better than expected. As you can see, we've got green figures there, both from a manufacturing sales perspective in Canada, but also the manufacturing index in the US. So better than anticipated. The manufacturing side of things that have really been improving kind of month in and month out, not just in the US and Canada, but also across Europe and across your major currencies. Across your major economies, excuse me. Okay, so that's pretty much in keeping with the overall kind of view of these markets. There's nothing significant there. So when we're talking about gold, we're not quite at the level at which we'd be looking for a sell trade with a high degree of confidence. Yes, there may be an opportunity to sell. Would we regard it as a high probability trade? No, it wouldn't really fit in to our understanding of what a high probability trade is, but it's still a viable sell trade. So you want to take that into consideration before you get into that trade. And the other big one is really the dollar. So if we're in risk on market conditions, we'd expect the dollar to weaken. That's the correlation. That's what we'd want to see. Now, if I have a look at these markets, we'll have a look at it on the daily time frame, of course, then we can actually see that there's a potential for a bit of dollar strength. But I must admit, it's not across the board. Like against the pound dollar, for example, there's just pure indecision. In fact, you'd be a little bit more supportive of price at this level rather than looking for selling. So the dollar yen, it's extending these highs. So this is in keeping with the risk on market condition, really, I guess, with capital coming out of your equities. Capital going into the equities, coming out of your safe havens. So this ticks that particular box. The complexity you have, of course, is that you're trading it with the US dollar. So that creates its own issue with this one particular market. It's taking that more traditional safe haven into account, which are your yen, gold, and Swiss franc are your traditional safe havens. The Swiss franc, I mean, we had a really strong extended move. We had some good profitable trades in that over the last couple of weeks. And same for the yen, actually. We're just up at these extended highs now. We were wanting to see a little bit of a correction, but we started to see some continuation further higher. It's threatening as if we're going to get a bit of dollar strength. So we can see dollar strength against the euro, against the yen, against the Swiss franc, potentially against the Swiss franc. We'd need this to work a little bit harder for us. And then we got some, significant weakness against the Canadian dollar, which is benefiting from oil. But the dollar strength trade begins to kick in against the Aussie and not so much against the New Zealand. So we've got a mixed bag. So in the hierarchy of strength and weakness, so I might just use this little space currently up on screen. So if we can identify strong currencies versus your weak currencies, so strength versus weakness, and that's really what foreign exchange trading is all about. If you can identify your stronger currencies and look to trade them against your weaker currencies, that's where you get your that's where you're likely to find the significant moves in these markets. So so what we can say is we've kind of got a, I'm just going to put this and let's look at this as a sort of a continuum. So we can pretty much put the US dollar on the strength side. So it's kind of over in this range. We've got a couple of currencies which would be a little bit stronger. So it's hard to say, the pound is stronger to a certain degree. Definitely the Canadian dollar, we're down at these lows, and perhaps the New Zealand. Okay, so what we can say is the British pound is probably, it's cancelling itself out against the US dollar, and you can see that in the pound dollar. But marginally stronger, we'd probably have the CAD, and we would have the New Zealand, but probably not as far NZ. So it's probably a little bit stronger than the dollar and the pound, but not as strong as the Canadian. So you have these, some of these, don't forget, are quite mildly strong. The Canadian dollar is probably the stronger easily out of the three. And then we've got markets like the euro, the yen.
Some reaction out of Germany following the weekend elections, as CDU head Armin Laschet speaks, saying that the results of the state elections are disappointing.
So those are the CAD, the Swiss, the yen, the pound, and the euro. So this is your I mean, this is just a bit of analysis now, just on screen for you guys, but this is what you'd be looking for, and if you can do your analysis and you can look at daily timeframes to do this and to learn how to do this yourself, but you'd look to trade the strongest currencies against the weakest currencies. So you know, there might be an opportunity to sell the euro dollar, for example. There might be an opportunity to sell the euro pound, to buy the dollar yen, to buy the pound yen. So that's how we utilize strength versus weakness, and there's some similar opportunities with your minor markets like the CAD, the euro CAD, the euro New Zealand, the euro Swiss, the CAD Swiss. So you don't want to spread yourself too thin, so maybe choose one or two of these opportunities, and we'll certainly look at the dollar, the euro dollar, and the dollar yen, and maybe the pound yen. And so there's four markets there straight away that we can have a look. We can really sort of delve a little bit deeper into those types of trades, and this is what we can see playing out in front of us when we look at the charts. So we know that if we get a breakout trade to the downside, then we know that the strength and weakness analysis that we've just carried out, you know, is in line with our understanding. So it can kind of hopefully give you a little bit more confidence in some of your decision making. Okay, so that's the euro pound. So that's the currency, just the breaking down some of the currency strength versus weakness and looking at those opportunities. I suppose the last markets we're just looking at really are the crude oil. So a little bit of selling has crept in only over the last couple of hours. Prior to that, we were looking like we were going to continue to move above the 66.20. So we'll have a look at that on a smaller time frame. So we put our trade plan together now for the US Open. We've still got 20 minutes, so we've got plenty of time. And we'll do a little bit of a review. So let's look at it on the bigger time frame. So what we can see is we've got a series of higher highs in this market, which is what we'd want to see. So then we start running into a little bit of, we failed to make a new high at this point, and we actually see this little bit of rollover price action to the downside. So that's your first kind of major structural failure since the 10th of March, so since last week. So we're seeing this market rocket to the downside. So we're seeing a lot of these buyers that had been in this market over the last 5 days actually look to get out around this sort of price, and prices are dropping quite significantly to the downside. Now we're still in this market to the upside, don't forget. So we understand these markets are going to ebb and flow. What we'd want to see is a structural failure back to the upside. So if we can fail around that level and reverse a little bit and fail to make a new low, then and if you see that type of price action where prices start pushing higher, and really we want to be, in terms of our approach and the philosophy, we're wanting to be long crude oil. We have economies coming back online. We might see a little bit of short-term softening. Hopefully we won't see much more, but we've broken even. So this is our break-even trade for this market. So I think we had our stop loss down at these lows, if I'm not mistaken. Let me put that up on screen. So we had our stop loss there. We had our entry just in and around this price. So we were able to bring our stop loss right the way up to break even. So our stop loss is at break even. And as this market has kicked on to the upside, that's what you'd want to see. And now we can tolerate the pullback, which is what we're currently experiencing now. This is your pullback trade. And if you think of the psychology of what's happening, there is a bit of liquidation. There's a bit of profit taking up at these highs, which is fine. We know that's the case. But the important part, and phase number one for us, is to avoid taking losses. So if we can get ourselves into a situation where we don't realize a loss on the trade, then that's objective number one ticked off, so to speak. Now we can focus exclusively on profit taking. So do we want to take profit at any given current price? The answer is either yes or no. We still don't want to take profit. We still want to stay in this trade. And objective number two is to let the winners run. So we can put up with these little pullbacks. We would like to stay in the trade if we can. We're not in control of that. So if we end up taking a small, if prices come back to our entry point,
PM Johnson on Northern Ireland, we haven't seen the EU's letter yet.
Then so be it. But that's the trading psychology that we can make decisions with where we remove the stress from the decision making.
There to uphold and buttress the peace process.
And we are looking for a multiple gain in crude oil. We're not looking just for a one times our risk. In return, we're looking for 2, 3, 4, 5, 6 times our risk, whatever the case, 10 times our risk if we get a really, really great opportunity. So it's really the case of cutting your losers short and letting those winners go. And that's what we try to practice as best we possibly can. Some weeks and some market conditions are absolutely perfect for that. Other weeks that are a little bit tight and conditions are strange and we're not seeing the correlations, it can absolutely be a little bit more challenging in terms of needing to be quite patient for those moves. But we're going to try and stay in the crude oil trade. This has every potential to, with the recent decisions from OPEC Plus, to refrain from tapering their supply cuts. They've rolled that over, so they've kept supply restricted at current levels, and that's only likely to help support prices push higher. However, we need to put up with these periods of kind of erratic pullback, let's say. They won't move in a linear line or linear fashion. Okay.
So PM Johnson speaking on the AstraZeneca vaccine, very confident about the program.
So AstraZeneca is running into a bit of difficulty, we see. Over the weekend, there was a number of... I think it's fair to say that there's probably not a huge correlation between, I suppose, the 4 individuals that had blood clots. They've obviously put a bit of a ban on the AstraZeneca. A number of jurisdictions have put a ban on AstraZeneca, but we'll see if that comes back online. I'm sure it probably will in the next day or two. It'd be surprising if that wasn't the case. So let's put our trade plan together then for the session. So we can certainly have a look at the euro dollar. We're below the monthly low. We can see what's been happening over the course of the morning, and that, as you can see, is not a huge amount. There's this, those of you that are interested in your price action, we've kind of got this sort of bearish flag type situation, and the breakout of that level could give us a decent opportunity further to the downside. So we'll add the euro dollar to our trade plan for the session. Yeah, we'll definitely add that one. So we can see that there's not really an awful lot going on here with the pound dollar, largely because they're as equally as strong as one another. So we can overlook the pound dollar for now. The dollar yen, we can certainly see if there's some continuation to the upside. It would be that dollar trade to the upside. Let's see where the opportunities lie. There's likely to get a bit of uptick, but we're a little bit away from the levels at which we want to get into this trade. So again, we can perhaps forego that, and we are looking for the euro dollar as well. So we can forego the dollar Swiss. The dollar CAD, you can see that we're largely strengthening, and we have been for the last 4 or 5 days against the dollar. So again, we want to avoid trading strength versus strength. And in the matrix I put out just a minute ago, you can see that the Canadian dollar is probably the strongest currency out there, followed very closely by the dollar. So we've got some consistent weakness in the Aussie dollar to the downside. So we're seeing some weakness there. So we'll have a look at this in some detail. New Zealand dollar. You can see that the New Zealand had been stronger over the Asian session, and we've seen prices just roll over and failing to make those sort of new highs. So that's a bit on the concerning side. and it's marginally stronger than the US dollar. So again, we don't want to trade strength versus strength. We're looking for that strength versus weakness trade. An opportunity that is probably worth looking at is the euro pound to the downside. We already discussed there's pound strength and dollar weakness. Sorry. Let me take that back. There is pound strength and euro weakness, excuse me, which means the euro pound to the downside, but it would need to be below the 85.43, which is a level we spoke about for most of last week. And you can see we're a little bit away from there. So are we likely to get that move today? Probably not. So we can discount it. Timing is important. Are we likely to get explosive moves? You see that can change. If we look at the pound and we see the pound rocketing, we go straight away to the euro pound, and we'll see if an opportunity exists. The euro yen, the euro and the yen are both quite weak. So again, it's the pound yen. So we'll have a look at the pound yen to the upside. Gold. Do we have the setup for a gold trade? The answer is probably not. If these prices were up at these levels, the 1760 level, then they would definitely look a little bit more like a selling opportunity in gold. Crude oil, as you can see, we're experiencing a little bit of sort of weakness, but the overall trend is very much to the upside, and we want to try and absorb these little sort of momentary periods where prices just want to roll over a little bit. So as you can see, we've got our break-even stop loss not too far away from the current price. So, and one of the major reasons as well is if we had our initial stop loss under here.
The World Health Organization is saying that their advisory committee is assessing reports related to the safety of the AstraZeneca vaccine.
Okay, so we can look at this on a daily time frame, and we can see we got the pullback, and this is potentially a lower high. So this is a failure for this market to make a new high, and that's what's concerning about this. Is so that could we see this little bit of price action over the coming days? Absolutely. That is, I suppose, probability in action. So we can look at these levels, and we'd be below the monthly high. So really, it's a case of us deciding, do we want to expose this much capital in this trade? And the answer is absolutely not, because of the nature of the setup. And every trade is different. There's not a one size fits all to trading markets as well. So, is there a tradable opportunity in crude oil? Not really. We will monitor the S&P very, very carefully and see what opportunities may or may not exist during the session. We've got 4 different foreign exchange pairs. We'll have a look at the S&P. We'll just compare and contrast it really with the Nasdaq. The Dow Jones is up at these highs, so we'd want to see a corrective move really to get in at a lower price. The FTSE, we've gapped higher and then kind of rolled further to the downside. The DAX is looking quite weak, and so the equity markets for this session so far, and we've got a lot of US capital coming into these markets now in the next 6-7 minutes.
The German foreign minister says he does expect the EU to agree on human rights sanctions against China. Says he does expect.
Okay. Oh, and just Bitcoin.
We're just under 10 minutes away from the top of the hour. More Canadian data due. Existing home sales month on month for Fed. Prior read is 2%.
Just on Bitcoin, we've kind of hit the 62,000, or very close to 62,000 level. Our position on Bitcoin has been the same now for 4 or 5 years. as a long-term investment, have a look at it. If you're looking to trade it short term, it's incredibly volatile, and an awful lot of people get burned looking to trade Bitcoin. So it's not for us as far as trading is concerned, but in terms of investment, if you have some capital and you wanted to put a small percentage towards Bitcoin, look to get on and get it into those trades on the dips if you can. But for us, it's far too volatile. We don't want to put our trading accounts on the line just because we want to trade Bitcoin. So that's really the reality of Bitcoin for now. If it becomes a little bit more regulated, regulated is probably not the right word, but if it becomes a little bit more stable as far as price action is concerned, then it might be something we'll trade in the future, but just absolutely not now. The last thing you want to do is to take get into a buy trade at 57,000 and within 2 days you could be down at 45,000. So it would be a psychological roller coaster and a very, very painful one for most. So really, really tough markets to trade. And what we're seeing now is a lot of institutional money come into Bitcoin, which is giving it this extra push to the upside. But again, they're controlled. They're relatively, percentage-wise, they're kind of small percentages of overall funds, but there is a bit of capital, a bit of institutional capital, and probably has been for quite some time coming into Bitcoin. Okay, so let's set up our trade plan then. So we can start with the euro dollar. So we can put this in here. Let's look at it just on the daily time frames for now. We can see I'll just take a couple of these away. These levels on charts are more intraday levels. Just take note of this low in here, and we'll also take note of Friday's low. So that's the euro dollar. Next one is the dollar yen. So we're just trading up at these highs at the moment. We'll have a look at this in a little bit more detail now in just a second. The third one is the Aussie dollar. So this market is just taking that little bit of a roll over to the downside. We're below the 50 period moving average, which is important, 77.41. We're below that level as things currently stand. So let's look at this market in a little bit more detail in just a second.
3 minutes till Canadian existing home sales month on month, the third prior read of 2%.
Okay, and the fourth market for the currencies is the pound yen. So all of these markets very much fit with our analysis on strength and weakness.
The regulator BaFin says they don't expect to raise the bank's counter-cyclical capital buffer in 2021.
The pound yen, we're extending these moves to the upside. So Friday's market was a little bit indecisive. Okay, so we'll go into that in just a second, and just want to compare and contrast really the S&P and the Nasdaq and see which market might give us a little bit more of a heads up than what we're currently experiencing. And Monday market conditions are not always fantastic. Sometimes they are, but especially if the markets kick off if they're quite explosive from the off, Mondays can be quite interesting conditions. If nothing happens on the open and for the first hour of the open on a Sunday evening, then we often find Monday, unless there's any news events that are likely to impact our trading decision making. We've got our all-time highs up here. We've got monthly high, obviously, along with the all-time highs. And we've got these little lows just sitting in here. So we're up at, and that's why we're adopting kind of a risk on market condition, which is a little bit counterintuitive for the dollar strength trade, which is again kind of what we're looking at. So really the better trades are very likely to be in the dollar yen and the pound yen, just due to the fact of their status as safe havens. But what we'd like to see is a little bit of buying coming into the S&P. And then NASDAQ will be an interesting one to keep an eye on as well. These are all your big tech firms. There's this cyclical rotation.
In Canada, 6.6% month on month for Feb.
There's this rotation with stocks during the COVID pandemic. There was a lot of capital coming into your tech firms. We were all accessing and purchasing all sorts of products and services from your big tech firms, and because we were all sort of confined really to home and things like that. So there's a little bit of an unwinding of that as a trade idea, and there's other equity markets are kind of benefiting on that rotation trade.
Research from the IMF says the corporate market power in advanced economies has strengthened significantly during the coronavirus pandemic, and says competition authorities need to be increasingly vigilant when enforcing controls on mergers.
It's not surprising with the amount of capital that are swishing around in these markets. There's a lot of capital for mergers and acquisitions, so we can probably expect to see an awful lot more of that.
Fixed income Spanish Treasury to issue up to €6.5 billion worth of bonds maturing 2024, 2028 and 2050. That's on Thursday.
Okay, so we'll keep an eye on the NASDAQ, and we'll keep an eye on the S&P 500 just to see. As you can see, there's practically no volatility at all in these major markets, and I mean there's very little across the board, to be fair. So we want to take that into account really with our decision making if we can. So what we can do is we can do a little bit of analysis. So what we can do here is we've got this little low, the 1917. Looks like we're getting close to that now as we speak. So we're looking for a breakout sell trade below the 1917 level. So we'll see. We'll just monitor that price, just see if we get close to that level. Just want to see what Friday's low is in the Aussie dollar, which is the 77.25. Oops. So we're looking for a sell trade, but it will be below that 77.21. We're looking to sell, so it can be in a nice red color there, just at the bottom of the screen. So we're looking for a sell trade in the euro dollar, sell trade in the Aussie dollar. So just edit this. Looking for a buy trade above. It'd have to be this little swing high in here, 109.24. 109.24. This is an interesting trade that's worth looking at. So we've got this level just up here at 109.24. Let's go into the pound yen, because you can see the clearly defined uptrend in this. So we can all look at this price action up here at these highs, and just taking this level just up a fraction, we can now look to buy this market if we get a close above the 152.04 level. 152. We've been looking to buy a pullback at the 50.70 level. So this 152.04 level, but we'd want to close above that if we can. Okay, so 152.04. Okay, so we're looking for a close above that 152.04 level, and we can put that in green. So this is actually on the hourly time frame. So we're looking for a sell trade in the euro dollar to the downside. We're looking for the Aussie dollar to perhaps take a bit of a roll further lower. We'd like the dollar yen to be breaking above that 109.24 level, and we actually want a close. That's the confirmation we need in which to start pulling the trigger, which is a close above the 152.04 level, because this market has failed to do so on many occasions. It continues to fail to close above that level, so that will be quite significant if we were able to close above it. Okay, we're kind of just monitoring the US indices markets for an opportunity. So currently up on screen, you can see the markets. We're looking for opportunities. We're looking for the euro yen. We've done our strength analysis, strength and weakness analysis on these foreign exchange markets. And we already have a reduced number of markets that we look at, that we want to become experts, I suppose, in the markets that we focus on. We've got sort of 10 foreign exchange markets, which generally give us all the opportunities we need. And we can track and monitor the US dollar and see how all of these other markets interact with the US dollar, to try and sort of gain that edge. So as you can see, we look at 10 foreign exchange markets every day. We've got 2 commodities, and then we've got 3 US indices, 2 European, and the Nikkei as well in Japan. So we're able to sort of compile and build diverse trading portfolios when we trade these markets. It gives us that flexibility to do that, depending on what's happening and where the volatility is. There's a lot of minor markets, a lot of exotic markets we're not that interested in. We do want to trade the large cap markets and sort of have more of a focus on those. They're obviously the most popular as well. Okay, we do wonder, it's sort of 10 past 1. If you have any trades that you'd like me to look at, it does appear that there is a significant lack of volatility in today's market. And keeping an eye on the crude oil trade as well off screen as well. So if anything interesting happens in that, we'll have a look at it in a bit more detail. It has taken a bit of a roll over to the downside, but it's finding a little bit of support, and we'll see if anything kicks on from there. If anyone's trading anything, do let us know. I'm happy to look into it for you if you like. We know which markets we're looking to trade. We know the prices and the levels at which we will become interested in trading. If prices don't break these important levels, then we're not going to be chomping at the bit in order to get into those types of trades. Trading for us, we need to have a high degree of confidence in our decision making, and for that we require trades to tick as many boxes as possible in terms of the opportunity and the entry. I can see the euro dollar's sort of edging a bit closer to that 1917 level. Nothing in the Aussie dollar just yet. The dollar yen, we might see that next leg to the upside. Same with the pound yen. Wouldn't be too far away from that, and pretty much nothing's happening in the S&P and the Nasdaq. So will we have quiet market conditions in the build up to the FOMC on Wednesday? That's unfortunately possible. That is likely. We'll have to wait and see. Certainly there seems to be a little bit of a pause for now. Perhaps they're just taking a little bit of a breather. Okay, so let's have a quick look then at the euro dollar trade. We'll just do a little bit of multi-time frame analysis and see how price behaves around this level. As many of you know now,
as expected, EU official now confirming the EU is launching legal action against British changes to the Northern Irish trading arrangements. EU official confirming there via Reuters.
Okay, that's interesting. I'm not sure what that means.
The Commission is calling for talks with the UK to try to find solutions.
So there's two things we need. When we look for entries, we want to see the levels. We want to see prices close below those important levels, and then we want to see continuation. And as you can see, when we look at this on the 5-minute time frame, prices spiked lower, which is good. We want to see that, but they failed to stay lower. So that doesn't, this price action here doesn't fit any criteria that we use to get into a trade. Could this just be a false breakout to the downside? Potentially. So we've got no interest in trading that. What we might see is a little bit of a pullback before we get that next leg. And we've got the levels that we look for. So we want to see the market, close. Excuse my drawing. It's not very good. We want to see the market close. Whoops. And then we want to see, that continuation trade. And you kind of want nice normal candlesticks. You don't want nothing too extreme to any great extent. And this would be objective number one, where we get a close below the important levels that we're looking at, the 1917. That would constitute a tick. And then number two, we want to see that follow through. Then that is a green light to get into the trade. And as you can see, we don't have that to fall back on just yet. So it might develop now over the next coming 5-10 minutes. We'll have to wait and see. But this is what allows us to stay out of losing trades. This is the reality of it. We get asked all the time, what conditions do we have to get into a trade? And it's quite straightforward, like as I've just explained. We want to see a close, and then we want to see follow through. And if we don't get either of those, then it means prices are unlikely to continue lower. The downside, and of course there's pros and cons to every decision you make when you trade, but the downside is occasionally we can get in at a poor entry price. So it might mean on occasion, instead of getting in at 1916, we could be getting in at 1910 or 1912 or something like that. So we might be a few pips late getting into the trade, but we'd rather be 5, even 10 pips late getting into a trade, but tick the box, consistently tick the box for follow through. So it just keeps us out of this trade. So many traders will just get into this spike here. They'll just get into the spike, or they'll be trading tick charts, or maybe even 1-minute time frames. Even we failed to close on the 1-minute time frame even. So there is a lot of traders that trade tick charts. What you're up against at these much lower levels is some of your automated trading bots and trading systems and things like that can execute trades, get in and out trades a lot quicker than you or I can do. And that's the reality of, I suppose, trading with a bot. Will we see the next leg to the downside? We very well may do. Like, there's a big difference between a market which is really poor on liquidity and volume, like these markets are currently, where you'd want to take your time getting in. You wouldn't want to be too rash about getting into a trade. And then there's other market conditions which are explosive and keep making higher highs and higher lows, where you'd be a little bit more reactive. You'd want to trade the market conditions as well. So it's just about putting all these things together really, and doing so as consistently as you possibly can. So will we get that close below that important level, the 1917? That's the question regarding the euro dollar. If we do, then there might be a sell trade. If we don't, then we'll probably look to just stay calm right now. There's nothing else of note really to work on. And then you've got to decide, of course, whether this one outlier or this one trade is worth pulling the trigger for. If you're not seeing follow through across any other markets, and we've had a few of those over the last few weeks. I mean, the pound yen is a really good example of for long periods being an outlier versus many other markets. And it's just continuing to make higher highs and higher lows. We'll wait and see. So, look, we've got these markets that we're looking at. We do need to pack up in just a few minutes, perhaps. I suppose the last thing we all want to do really is spend a lot of time sitting in front of screens during markets that are not moving too much. So we'll set our little targets. We know the levels that we want to make decisions at and to get into those trades. And of course, if we get into any trade, we do post it through our signal service for our traders, so they get access to the trade, and confirmation that we get into those trades. So I'm just watching the euro dollar there, just on the top left hand corner. It's attempting to close very close to that 1917 level, but not quite. The other benefit behind the rules that we adopt when we trade is that it keeps us objective. You shouldn't really hear us say, we think this will happen, we think that will happen, because what we think doesn't really matter an awful lot. It's far more important to see what price is doing. And so we'll always get in at this level above that price, get in at this level below that price. And there's what that allows us to do is to be objective with price and to trade what we see. And not really be trading what we think. That's a difficult place to be. So be mindful of that. We can have a bias, and we talk about directional bias all the time. We've got a bias, that the pound yen is going to push higher. It doesn't necessarily mean that we're going to be buying the pound yen, or even we might even look for selling opportunities in the pound yen. Our bias can still be to the upside, but we can still make trading decisions around that. Okay, if there's any questions, let us know. The market's currently up on screen. We're primarily focusing on the euro dollar sell trade, the Aussie dollar sell trade, but we're just mindful of the conflicting sort of market condition really for the dollar, and would like an opportunity in the pound yen and the dollar yen, but there's very little volatility in today's market, and you can see in the S&P and the Nasdaq, and all eyes now will really be shifting towards the FOMC. What are they likely to do? regarding interest rates. We'll see the dot graph as well this week, and we'll see there's an anticipation that the Fed will increase interest rates in 2023. Will we get confirmation of that or not remains to be seen, and how will the Fed react to this inflation and bond yield story as well, are other things for these markets to really try and weigh up. So unless they've got a strong handle on that, we would need to be patient really at this time. So those are our levels, guys. We do need to shoot off, unfortunately. We do have other trading sessions with traders. So on that note, let's see if we get any follow through with these markets. For anyone that wants more information about any of the products and services we offer, just go to our website, thelivetraderoom.com, for more information. And there is a chat function there as well if you'd like to speak to us in a little bit more detail. But on that note, guys, thank you very much for joining us. As always, we'll be back again tomorrow, 12 at noon. So we'll prepare again, and we do tonight at 9 o'clock. We do have our live trade plan webinar, where we identify exactly what markets we'll be looking at. So when we get to our trading desks in the morning, we'll be able to be fully armed with all the information. We'll have done all our analysis. And Mondays are always slightly different because we've got all of Friday's trading conditions and Sunday night and Monday morning as well to sort of take into account before we get into trades. But so Monday we can go through this sort of process in a little bit more detail. We're happy to do so, and the rest of the week is geared up already because we do have our session every evening at 9 p.m. So you're very welcome to join us for that. And like I said, do go to our website. Details are there up on the screen, and we'll look forward to seeing you then. Yes, so Finbar, absolutely. The oil trade, are we staying in it? Yes, we are. In fact, that's a really good point there just before we finish. We're seeing a little bit of rollover price action. So our bias is still firmly to the upside. We're just seeing this little bit of negativity, and we were in quite a positive situation there just a few hours ago. But yes, we are still sticking with that buy trade. We've broken even on the trade, so we don't expose any capital on it. So we have our stop loss just in here at our entry price. It's the 64.34 level. Prices are just really, all this is a pullback off the highs so far. So our analysis is such where we just want to try and stay in this trade as long as we possibly can. This is a bit of a game changer to the downside, but we might get some continuation in these failure trades to close lower. So we just have to watch and just monitor this market. But the point is, we're not exposing any capital. That's how we'd like it, and let's see what happens at these current levels. Yeah, good stuff. So yeah, we're trying to stay in it because we do want a sizable return on this trade if we can. We could be easily up here at $60, $67, $70 over the next week or two. So we'll see what opportunities it gives us. And we'll just trade the price action basically. The next step would be looking to, start booking in profit on the trade. So on that note, thank you very much for joining us. That euro dollar trade is still struggling to close below that level, so we know it's an important level of support, and these prices are really struggling to break through that level to the downside. Maybe dollar yen might give us a bit of an opportunity to the upside, but it's very slim pickings in today's markets, guys, so do take the market conditions in account always when you trade these markets. So on that note, thank you very much for joining us. Like I said, any further questions? Whoops. No, let me take you back. So any further questions, do contact us through the live trade room. We'll be back again tomorrow, 12 noon. So we look forward to seeing you then. So from everyone here at the live trade room, bye for now.